Investing your money is great, but the question is, how much exactly of your money should you be contributing towards your investments? And that's exactly what I want to talk to you about in today's video. And you want to know the answer? Well, here it is. As much as you can. Now, I'm just joking, of course. There's more nuance to that. I also think there is no right amount, but there is a right approach. And that's what I want to go through. And first of all, we should also answer ourselves what we consider an investment. It could be an investment in yourself, right? In the beginning of your career, you probably might spend some money on university or some courses or education to evolve, climb the career ladder, build a better business, right? These things are also in a way investments, right? At the same time, it could also be investments into your health, right? So many different ways how people choose to invest. But of course, in this video, I want to mostly talk about investing in the obvious liquid assets like stocks, ETFs, crypto, and so forth. And very often people have this misconception about investing that they need a large amount to get started. And I couldn't be further from the truth. In fact, starting small is probably the smartest strategy to get into investing rather than waiting until you have a large amount. And then it's really quite scary to deploy to the markets. It's easier to invest your first 10 euros, right? Then if you sit on €1 million and then you think about investing, trust me, it's much more daunting. You will make mistakes along the way. So you might as well start small, make smaller mistakes. So then you evolve and grow as an investor. Happened to me as well when I started off, a couple of €100 in a month. That's totally fine, right? You can even invest from as little as €1 in most brokers these days. Usually it's around €10 and even small amounts do compound over time. I mean, let's jump over here to compound growth calculator on EU Investing Hub. I'll leave a link in the description down below. You can run your own numbers, change your currency over here, initial investment. But again, I want to assume that you start with zero, right? You may be at the beginning of your career, never start investing before. Monthly contributions, let's say €50. Again, it might be less for you, it might be more. I just want to illustrate with very little money, you can still really manage to grow a nice portfolio over time. Expected annual returns, again, depends what you invest in. But if you choose something like the S&P 500, historically, that returned anywhere from 8 to 10%. So let's go with 9% in this example. And then annual deposit increase. For now, let's leave it 0. We'll come to this in a later point. So basically means for the next, in this case, 40 years, you're going to contribute only €50. Now, again, probably that's not very likely because hopefully over time you grow your career, your income grows, and you'll be able to contribute more on a monthly basis. But just to illustrate you how still even €50 over time, 40-year period, can grow into almost €250,000. So really not too shabby. You really see how those numbers do compound. You see in the beginning, there is not really any change, but then with time, it really starts compounding. And again, if you start investing from when you're 20, for example, you would easily have 50 years. That's when you're 70. That's probably the new pension, the way things going. You might have to work until 70, 80, and the way, our government are managing their pension funds. So in this case, with 50 years, that'll be well over $500,000. You see, once again, compounding coming towards the later stage of your investment journey. So very important to start early. And of course, even small amounts, they do compound. So don't feel bad if you have only a little money to invest. That's perfect. And another very important point has to do with knowing your numbers. Because I speak to a lot of people, I do personal consultations as well, or people come up to me and ask me, how much they should be investing. And my first question is always, how much do you profit in a month? And funnily enough, most people can't tell you that. Their saving rate, how much the income is, usually people tend to know, right? Because you either have one income source from your salary, or if you have your business, maybe that is your income from there. But then some other people, myself included, have multiple income sources. So then it already starts getting more tricky to track. But let's assume you only have one. Great, your top line revenue, your income, amazing. But you'll be surprised how few people, and ask yourself that question, what's your saving rate? How much of that money you earn are you converting to savings, right? Is it 50%, 20%, 10%, whatever the number? It doesn't matter. What matters is that you know that number. And I think that's very important to know how much you're spending. Because that way, if you know you earn, let's say €2,000 as an example, and you spend, €2,200, well, that's a bad situation to be in, right? In that situation, obviously wouldn't be able to invest any money because you're going into overdraft. You're spending more than you earn. There, you have to fix on other issues to first fix your spending issues, or of course, start working on earning more, whatever it is. But it all goes back to knowing your numbers. And that's why I religiously do every single month complete my monthly budget review and net worth tracker. I made it available as a template free of charge. I'll leave a link in the description down below. You can find it over there. Just make a copy to your own drive and then you can edit it. And that's very easy. You can see basically in every month how much was your income, your expenses, your overall profits. By months you say all your various income sources. Then you have all your various trackers of spendings over here. And it's very easy these days, right? I use apps like Revolut, WeoBank, many different banks these days have inbuilt analytics. So all I do is open up my app of choice where I usually spend my money with, and then it already categorizes all the spending for me. So I would go in there, see restaurants, I spend, 600 euros. I go in here, put 600 euros for the given month. So that takes me a couple of minutes, and then I have a total spend and a total profit for the month. And then, of course, I also track my net worth. So here I go through and list basically at the end of the month all the various holdings that I have, my bank cash reserves, my investments, all the various brokers that I have, apartment real estate value, whatever it is. And then I can see my net worth over time. So not the most glamorous sheet, but it absolutely works. And I really know my numbers, how they develop over time. I think that's very important because that way you know how much money you can afford to invest. Going back to the first point where I said as much as you can, well, how much can you invest? That sheet shows you how much you can invest. And not only that, once you know that number, I would even go further and make it a habit to pay yourself first. So every first of the month or whenever you get your income, for some it's the first of the month, for others the last day of the month, whatever it is, the next day, make sure you invest your money first, because too many people, they spend all their money until the end of the month and then they thought, maybe I should be investing. And then maybe that month they went a little bit overboard. They went to too many restaurants that month or went on a lavish shopping spree, whatever it is, and said, this month I have no money left. I'll start my investments next month and then next month and then next month. And it keeps on being pushed. But if you paid yourself first, meaning you invested the money that you committed to invest, again, in this example, 50 euros, 100 euros, whatever works for you, the number that you found out you can afford to invest, then you made the commitment, invested money, and then you live from the rest. That's a really important approach that too few people actually do. I personally do the same. Whenever I pay myself, right away, I make a transfer to my stockbroker. That's just a non-negotiable. And also keep in mind there are different personal life stages we all go through. When I started watching, other YouTubers and investors, showing the numbers that they invested, for me, it was like mind-boggling numbers, when they invested a couple of €1,000 in a month. And I just started my career earning less than €1,000 maybe in my first internship, right? So I thought, how would that ever be possible? So don't compare yourself to others. That's really the wrong way to go about it. I mean, I openly share my investments every single month. And for some, my portfolio might seem like a lot. For others, might seem like peanuts, right? Again, if I benchmark myself to a multi-millionaire, I look like an absolute loser. And, why would I do that, right? I want to compare myself to myself the previous month to see how I evolve as an investor in my portfolio over time. Now, when I go back a few years ago, when I did the first of those videos, it's nice to see where I came from, right? It used to be a fraction of what it is today. And I'm sure if I do the same, 5 years, 10 years from now, it will be even more of a surprise to see how the portfolio grows. So don't compare yourself to others. Go through your own stages, and then obviously as your income grows, as your earning grows, you can also afford to invest more. And that's exactly a very important point to make sure you actually do end up investing more. Because again, some people, obviously they get salary increases or start earning more in their business, but at the same time, they also fall victim to lifestyle creep or lifestyle inflation, where as their earnings increase, so does their spendings. By flying business class, living in a bigger house, getting a bigger car, all those fixed costs start creeping up directly proportional with the increased income. So at the end of the month, they're literally left with exactly the same amount they invested previously, and that's not a smart way to go about it. Now, clearly, you obviously want to level up your overall lifestyle. We all want, right? Obviously, when I started my career, I didn't stay in 5-star hotels. Now, that's one of the luxuries I'm really happy to spend money on. But I can afford to because my income also increased over time. And my saving rates actually increased over time. So it means my income increased faster than my spending. And that's a very important point. And that's why I want to go back to the example over here. Let's assume you start with 50 euros. We have all the same numbers that we previously had. The only difference is we have an annual deposit increase contribution over time, meaning you increase your numbers, your contribution to 50 euros by 5% every year. So that means next year you'll be contributing 52.50 euros, right? 5% of 50. And then again, 5% increase on that and on that. So every year, 5% more. Let's assume that's your salary increase over time. And of course, inflation, right? Money anyways becomes more worthless over time. So it's important to really increase your contribution. So let's click on calculate, and you see all of a sudden a huge difference in number. Previously, if you remember, at 0, it was just about over 500,000. Now with just 5% increase, it is over 1 million. A major, major difference. And that's what I'm saying. You want to make sure you increase your contributions over time. So as soon as you start earning more, make sure you contribute also more towards your investment. And for me, investing is very similar like going to the gym, right? You really want to turn this into a habit. So it's done routinely. It's part of your either weekly routine, your monthly routine. Again, some people might like to invest daily, and that's totally fine and possible these days. when we have brokers that don't charge a commission. So it's really up to you. I personally invest on a weekly basis. You might want to do it on a monthly basis. As I mentioned earlier, as soon as you get paid, you start investing, whatever works for you, but make that a habit. So you don't just do it randomly whenever you feel like it, right? It should become a habit. The same way how I hope you brush your teeth. And in order to make it a habit, you want to automate it as much as possible and then benefit from dollar cost averaging, which is called DCA, which is the opposite of lump sum investing. Lump sum investing is basically you just sit on your cash, accumulate it, and whenever you think the markets are down, you invest a large amount of it and hope you time the market correctly. But market timing is very difficult. I can't do it. Most people can't do it. And I think it's not the best strategy to go about it. And that's why I personally buy every single week. Now, I like going into my various brokers and then place the buy manually every first or second day of the new week. But for most people, that would be too time consuming and they might actually forget about it and not do it. And that's why I would say automate your investments as much as possible. And most stockbrokers these days will allow you to set up recurring buys. Means you set it and forget it. You set it up once, you say what you want to buy, how much you want to invest in, the frequency, weekly, monthly, and the time frame for how long you want to be investing for. And ideally, you want to keep it an open end, so just keeps on doing it going forward. And then basically all you have to do is make sure your bank sends enough money into the stockbroker, so the broker has money to then invest it however you set it up. And if your current stockbroker does not allow you to automate your investments, honestly, it's time to change it. And all of them that I use personally allow you to set up recurring investments. You'll find my favorites down in the description below. And that way you can't skip on investing. It will be done on your behalf, whether you feel like it or not. And that's actually the best way to go about it. At the same time, I also want to make you feel comfortable that it's okay to pause if needed. Now, I personally went through that myself. I was employed for many years as a luxury 5-star hotel general manager, working in different countries around the world, had a nice income, nice lifestyle. But then around 2 years ago, I decided to call it quits, leave the corporate grind behind and start building my own online business, which, touch wood, everything is going well. But in the beginning, when I moved to the UAE, you set up the company, you pay rent over there 1 year in advance, where at the same time, just bought a property over here in Lithuania. So a lot of outgoings left, right, and center. So it was a crazy time. And at the same time, starting off your own business, obviously my income was slightly less than I made previously in a nice, cushy corporate career. So during that time, for 3-4 months, I actually decided very consciously that at this moment, it was better to use those funds to reinvest into my business, start accumulating a little bit of cash reserves instead of just necessarily investing into the markets. But I knew it would just be a short period and I would be getting back into investing as soon as my numbers that we went through previously would work out again, right? That my income starts exceeding my spendings. During that time, it was the opposite way, so it wouldn't make sense for me to invest. Yes, technically, I could have invested 10 or 20 euros, but in the grand scheme of things, with the size of my portfolio, that wouldn't really have made a difference. So now coming back to it, I'm in a much better situation. I earn significantly more than my spending, so I can also now invest the most I've ever done in my entire life. So that's nice to see. Every single year, I increase my contribution quite significantly. Hopefully very soon I'll be able to invest 5 figures in a month. So that's my next goal. Pretty close to it, so getting there. But yeah, it just shows you again different life stages, different situations. So don't panic. Everybody tells you to invest. If you can't do it for a few weeks or months, that's totally fine. Now, if that goes over 1 year or 2 years, of course, in this case, I would really urge you to kind of revisit, your income. Can you do something about it? Can you work on a different side hustle? Or are there ways to cut down on the expenses? Because yes, we can all have a little rough patch here and there. If that's a persistent thing, then that's something you want to be looking into. Well, there you have it, friends. Hope you found this insightful. Again, ultimately, there's no right numbers. Those numbers have to work for you. They change over time. It's totally fine, right? So don't benchmark yourself to other people, but understand the core principle behind it of how much you should be investing for yourself at any given time in your life. If you have any questions about any of the things I mentioned today, pop them in the comments down below. Happy to hear from you. Next up, check out this video over here. As always, thanks for watching. Stay healthy, get wealthy. See you in the next one. Ciao.